All right, weekly outlook. We are middle of February and we are approaching CPI week. We just finished with NFP week, and this weekly outlook we'll go over the watch list, which pairs look very nice on the higher time frame, so you can insert your lower time frame entry model into your trades so you can make money. Week 6 of the 0 to 1 million challenge. So let's see if we can make some money together as well this week. Streams open Monday, Tuesday and Thursday. We're gonna do Monday New York together, and Tuesday and Thursday we're gonna do London session together. I'll leave the links towards those streams inside the school group and also inside the Telegram. Cool, let's go over Forex Factory first. Today we have a low news Monday, but I was looking at the financial news and we have tariffs coming up. So another tariff news. There's no red folder, but that can give lots of volatility in the markets, unexpected volatility. So there's no certain time where this can affect the markets. But we've seen last week already that tariffs, like unexpected fundamental news, can bring a lot of volatility. So make sure you don't get caught off guard there. Then on Tuesday, we have Fed Chair Powell testifying. That's always a bigger red folder if Powell testifies, so make sure you watch at 10. Also speaker at GP. And then Wednesday is, of course, the biggest of this week, CPI. One of the three big boys, NFP, CPI, FOMC, the interest rate decisions. We have one of the three big boys on Wednesday. So expect the volatility of the week to be around CPI. Also another Fed Chair Powell testifying, and we have NCD inflation expectations. Then on Thursday, during our stream together, we have GBP news, red folder. We have GHF, CPI. So GHF is quite boring right now. I don't trade GHF too much, but with CPI, it can give nice volatility to create some displacement, some structure for maybe then trade later in the week or early next week. And then we have USD PPI, unemployment claims, and on Friday, we have another two red folders for the US dollar. So that means the bulk of the volume is going to be from Wednesday, Thursday, and Friday. So most of my trades on the USD pairs are going to be after CPI. So today and tomorrow, when I take trades, most of the time it will be not on the USD pairs. Maybe some JPY pairs, some CAD pairs. Let's see now which one looks nice for that. Cool. No news, but keep in mind tariffs. Let's talk about DXY. And DXY, I said here, mental note, tariffs and CPI this week. And currently we are in a range, swing high, swing low, and we are kind of in between. We have two significant arrays right here. The premium array is this daily bearish fair value gap, where we are in, and we opened very aggressively to the upside on Sunday. But we're also coming back from a weekly, let's remove this, a weekly order block right there at the end of January. So that's a massive discount array. That means support for price to go higher. But now also on a daily, we have premium arrays, resistance, to push price lower. So that's the question, which one will hold? Personally, I'm looking at how this is respected. So if today closes lower, I am open for price action back towards the lows here. In the meantime, let me adjust this ugly arrow. There we go, that's better, cool. So I would say lower DXY, but again, very 50-50, and CPI will give the answer to this. So I'm not very eager to trade early this week on DXY, I'm just gonna wait. Then let's talk about JPY, the JPY basket. Very interesting price action. Last week, we took shorts on the JPY pairs, and that means JPY basket goes up, the JPY crosses goes down. So we took some Euro JPY shorts. And currently, we hit a significant swing high, December. We still have some room to go higher. In my opinion, we can, of course, go back to the highs. The interest rates in Japan are very high. That means it's bullish for the currency. So I don't think we are done with the upside yet. And when I'm not done with the upside yet, well, where can we trade off? Higher from, we have two daily bullish fair value gaps. So initially, my game plan for the week is to trade from here. So that means on the JPY crosses, it's vice versa. So price will go up first and then down. That's what happens on the XXX JPY. So that means Euro, JPY, GBP, JPY, all the JPY crosses. This is the initial idea. But what of course can happen is that these arrays don't hold. And what is the game plan then? And this framework I'm now going to show with you, you can apply to every single asset. So let's remove the arrow. And I'm talking about the market structure shift. In the 2025 mentorship, we're going to talk about market structure very soon. I'm going to give you a whole blueprint on how to master market structure. But the basics here is when you have a swing low, right there, the pink dot, that's the last swing low that created the high, the most recent high, this one. When this swing low gets violated, so that means we're trading through it, we're ignoring it, we have a potential break of structure. So if that happens and we just close very aggressively to the downside today, we might see a break of structure to see even lower prices, maybe to this fair value gap or even lower. So this low is a point of interest for me to potential shift my bias from that bullish bias, from the daily bullish fair value gap, towards potential short-term shorts based on how we break structure on this 4-hour time frame. So last swing low, that broke the high. Vice versa, we have market structure shift when the last swing high before the low got violated. That's here, we have a market structure shift, and you see how it resulted in price upwards. But more market structures later in the mentorship. Cool, so that's for JPY. So short term, maybe for today, some longs on the JPY pairs towards the daily, and long JPY pairs, a short JPY basket. So Monday or Tuesday toward here and then up. So that means shorts for the crosses. Cool. Then the relative strength. I use AUD, NZD and Euro GBP for strength. AUD is way stronger than NZD. So longs are for AUD and short for NZD crosses. Then on Euro GBP, Euro is still weaker than the pound. So if you want to short something, short Euro, XXX. If you want to long something, long GBP, XXX, GBP USD, GBP CAD, GBP JPY. Vice versa for shorts for the Euro. Cool, and then the indices. The indices, especially NASDAQ, if you look at the higher time frame on NASDAQ, that is very ugly. Look at this. This is not nice, guys. We as traders, IC traders, we love trending conditions, and we are just in one big consolidation right now. Short term, I'm not too eager on taking entries on NASDAQ or the indices in general. We have an S&P at the highs, S&P at the lows. Not sure what an SMT is. Watch the 2024 mentorship on the YouTube channel. My point of interest is, do we hold this 4-hour bearish fair value gap to go lower? Then I'm gonna try to catch some shorts towards the lows here. If we disrespect it, we can use it as an inversion fair value gap to go towards these relative equal highs right there. So today we'll get the answer to that. Same for ES, same bias, ugly daily, very ugly, not nice. YM, same. The indices look very alike right now. So let's see what we'll do. DAX also similar, very bullish. Very bullish. German economy, very bullish. Also here, going to wait for what the 4-hour bearish fair value gap will bring. So I'm neutral. I'm neutral on the indices in general, with a slight favor towards potential shorts based on how we close inside this 4-hour bearish fair value gap. But I think Monday to today's live trading will already give some answer to this, or maybe Tuesday. And we can also just chop around until CPI. So let's see. Cool. Then let's go over the USD pairs. And remember, we have that daily SIBI, the bearish fair value gap here on DXY. We have a neutral bias. It also means neutral bias on the USD pairs. And they also have conflicting structures. So for example, on Euro US dollar, I think we could potentially see a 4-hour sell model. So if a high here, we displace lower breaking structure for value gap 1. Then we have this up close candle, the 4-hour bearish order block that's respected, the bodies are respected. Then go lower again. So today we could sell off from this 4-hour SIBI towards last week's low. That's a pretty nice model. What this means, for this to happen, means DXY up. I'm not sure about that. Remember, I'm 50-50. Then on AUD US dollar, I have a buy model in mind. And what I mean by that is, here, last Monday, we took liquidity sweep. We see we have a big wick. We took a low, big wick, took a significant low, and then we displaced upwards. And then during the open today, we traded to this daily bullish fair value gap. So also a daily level and maybe a 1 hour buy model from that. So let's go to the 1 hour to see what I have in mind. And let's see if this holds for today's trading session. And again, with a not sure DXY, I'm also not sure which one is going to hold. So here from this daily level, it's a Sunday open. I don't like Sunday lows. Time is a very important factor in my trading, IC trading in general. A Sunday low, I don't like it, but we took liquidity, which is good. Then we rebalanced during London inside this 1 hour bullish fair value gap and the bullish order block here. And now we have another 1 hour bullish order block and a bullish fair value gap where we can trade off from. So during the New York session on Monday today, I'm going to look for potential this on AUD US dollar. So how I'm going to play this is very simple. I'm going to look for what DXY is most likely going to do. So if DXY goes up, there are shorts on the USD pairs. And shorts on the USD pairs, I think Euro US dollar is the best one to do from the 4 hour structure. This one. That's when DXY goes up. When DXY moves down, that means USD pairs go up. Then I'm looking for that AUD USD long. So that's the game plan. So I'm basically prepared for both scenarios. And let's see which one it will bring. GBUSD and NZD-USD, not too fan of the price action. Here, not sure. NZD-USD, similar, not sure. But I will use them for SMT purposes. That's for the USD pairs. Another USD pairs to compare with the CAD, USD CAD, is, let me show you the higher time frame here. Here on USD CAD, we took 2 yearly lows. We took the 2016 low or high, 2016 high, and 2020 high, the COVID high. And right there, on February 3rd, last Monday, we took that high and we swept it, and then we went lower, breaking structure. Then the 4 hour, see the break of structure, what I explained earlier in the video, in this outlook, the last swing low that broke the high, that is now violated by this 4 hour bearish fair value gap. I already took a short last week towards a clear drawn liquidity. What is that? This is the start of a monthly bullish fair value gap, and we also have a weekly bullish fair value gap. So what does it look like? It's the monthly time frame. You see the start of this monthly fair value gap here? That's a target. Also on the weekly overlapping, you have a weekly bullish fair value gap. So that's a clear drawn liquidity, which I'm open to short. So also the DXY goes down. I'm ready to take that very short. Let's see if we get that. I already got stopped out by the open candle on Sunday. There's like a massive wick the second it opened. So I stopped out the first second of the week. I think that's a record. I was over weekend hold. It can happen. I still think it's a pretty cool idea based on that sweep of the yearly highs, 2 yearly highs, lots of liquidity. So let's see. Then let's go over to JPY pairs. Because JPY, remember the idea of potentially today go to that daily bullish fair value gap and then go higher. That means first on the JPY pairs. First higher, then lower. So let's see which pairs on the XXXJPY could be nice for that. Let's go over USDJPY first. USDJPY, not my favorite. Why? We are in between a weekly bullish fair value gap. So we're that's support basically. And a daily bearish fair value gap. So yes, we could still do this based on the same price action as JPY basket, which would be cool. And if DXY goes lower, pretty nice idea. So definitely on the cards, but for now I'm waiting for that. Euro JPY is also interesting. Daily bearish fair value gap as well. Could be nice. Also, this is the shorts I took last week based on the downturn. Every single retracement, we could be there for shorts. Similar here, I'm open for that idea. I think GBJPY could be nice. Also here to the daily bearish for value gap. So let's see what we can do there from this 1 hour bullish for value gap towards bait to maybe catch a little long here. Small one, something like that. But let's see what price will give us later this session. So those are the point of interest for JPY pairs. AUD JPY, similar. And then gold. Gold is on a moon mission. it's honestly insane. We had that sell-off on Friday after NFP. But then we just went up and up and up. I'm waiting for this. So I wait for at least Monday for potential rebalance. Maybe this 4 hour bullish for value gap. Or maybe later in the week. We're gonna have a little sell-off on gold. But if it's so bullish, I think it's good to just try to buy every good retracement. But this is too bullish for me from the open, so I'm probably gonna wait out a little bit to see if it calms down before getting an entry. And that's it. Clear game plan. Every asset is there. And now it's the goal to wait. Little annotation here on Euro JPY is patience. Now it's time to wait. You know the assets who have a nice point of interest. Maybe you have based your entry model. You have other pairs on your watch list. Perfect. Now it's finding something to do in between. Don't go watch the charts 24/7. Find something to do in between. Go to a workout, go for a walk, spend time with your family, deliver A+ quality work on your job. Go play video games, whatever. Go read a book. Find something. Cool. That's everything I had to share. I see you guys during the streams. Monday, New York, 9 a.m. EST. Tuesday and Thursday, 2:30 a.m. EST, London stream. See you there. Bye-bye.